Welcome to Deal Talk. My name is Jeffrey Veit, and we're going to talk about avoiding dealer tricks and buying smart so that you save big when you purchase a car, truck, motorcycle, boat, motorhome. Again, this week, just like every other week. First, I'll start out with the EV Corner. This is about the news in the electric vehicle market, and I bring this up first because it seems to be very popular when I get a lot of remarks about it, a lot of questions about electric vehicles. I know people are thinking about it, and they're thinking that they have to buy them, and that's not the case. First, EV sales are up a little bit, but not because it's a good thing. EVs are being pushed on the market, and as usual, people buy and think later. Just get one because they say we need to get one, we have to get one, or it's good for climate change, and most of us don't even have the real story on climate change. Nope, there's a guy out there by the name of Coonan that you can look for his books about climate change, and he'll put you in the picture. He used to work for Obama. He was one of the scientists that kept track of this. He's actually a physicist by degree, but he really understands climate change very, very well, and he'll help you understand why this isn't going to make any difference. Now, I don't think he's an expert on electric vehicles, but he certainly is an expert on climate change. You constantly hear that there are new advances and they're being improved, and the EV is a rapid motion invention that's going to pick up steam quickly, but it's like saying making huge advances against climate change. That's what they say, but that's not what's going to happen. That's not what's happening. The fact is that the problem of EVs are not easily fixed. They're not just a fact of renaming them. New battery claims won't make a measurable difference for a long time. Sodium-ion batteries, you hear about those, or solid-state batteries, are just smoke screens. They're not going to make any measurable difference. Driving distances, charging times, charging convenience, initial price, battery life, those are the major issues that require major breakthroughs in order for it to really work out. Think about the batteries in your phone and your flashlight or your solar yard lights. Have they advanced much, the batteries themselves? No, phones have more apps on them now, and phones will talk to you, and they have AI built into them, but the batteries aren't really that much different. Instead of 10 hours, now you get 11 and a half hours or something. It's not enough to make a difference. They talk about improvements and advances, but you tell me, has it changed very much in the last 10 years? Batteries? A little, I'm sure, but enough? No. Batteries haven't changed that much in the last 100 years. They get a little, so they hold a little more juice, a little more juice, a little more juice. But you know what? That's not the problems. The problems are greater than that. It's the fact that you have to have 1,000 pounds more in your vehicle. It's the fact that it costs 25,000 pounds of ore to create a battery or close to it, even though new improved batteries have similar problems. These kinds of things aren't going to work out easy. I say we spend all this money on climate change research so that we can change with the change. The climate change is happening to some degree. I don't know if it's as bad as they try to make it out to be, but it's changing some, the climate's changing. But what we should be spending our money on is how to adjust to it. I mean, we talk about how, the average temperature has gone up and how some of the farms in, let's say in Texas, for instance, are having some troubles. And it's because of location. As the Earth's climate change, it's not changing. It's more of a rotating motion of the climate. It's moving around the planet. And that's what we need to adjust for. It's not climate death. It's climate change. Just be aware of that when you're looking at these vehicles, when you're talking about electric vehicles. Think about the conveniences, the inconvenience. Think about the fact that you're going to have to charge it all the time. You got to remember to charge it. And if you run out of charging, you got to have it towed. Yeah, there's no charger in a can. You know what I mean? It just doesn't work that way. Anyway, that's EV Corner this week, but an email this week brought up a good point without even knowing it. Jennifer in Norristown, Pennsylvania asked, how to know if the deal you drive or make, is what she meant, is the right one for you. Due diligence can indicate a good deal, but is it the right deal for my needs? At first, I did not get it, but then I realized that Jenny was talking about things like her budget versus what she wanted, right? She may have driven a hard bargain on a vehicle, but she got the price down to where the budget still wasn't right. This question should be determined before you ever look at a vehicle. In fact, there are a lot of questions that you should get answered before you even start your quest, before you even go to the due diligence, before you do anything. There's some questions you got to ask yourself in order to get yourself prepared properly. What questions should you ask yourself and decide before you even test drive, right? Or shopping, before you leave the house? I can list a chunk of them right here, 15 or 16 of them that you should get answered before you ever leave the door of the house. And you may find out that maybe now's not the time. You need to wait. You might find out a lot of things. You should ask yourself, one would be, what's your total budget, either monthly or cash, including down payment? What have you got to spend? What's the absolute most? What's the most per month? That's an important question to know, so you aren't out there negotiating on the wrong vehicle. What is your credit score? How does it put you in terms of interest rate? So when you figure payments, if you're going to be financing it, and most people are, where your payment's going to be, because the interest rate will tell you that. Help, plays a big part of that in any event. And your credit score plays a big part in determining what that interest rate will be. How much will the bank give you for that payment area if you keep the terms sensible? So in other words, if you don't go out to 84 months or something ridiculous like that, because the farther you go out, the more money you can get. But the problem with that is you're upside down and buried if you ever need to have change. If you try to keep the term at 60 months, how much money can you get for that budget? So if your budget's $400 a month is the most you can pay out for a vehicle, and you don't want to go over 60 months, you might find out, well, $20,000 is my price range. That's it. Remember, the longer the term, the more you get, but the better the chance of minus equity. That's the big thing. I would stay at 60 months. 66 is supposed to be okay, but 60 for sure would be the best on a new vehicle. I wouldn't go any longer. Because what happens is the value of the vehicle stays closer to what you owe. So when you do have to trade, or if your needs change or something happens, you're not way upside down. Another question you need to get answered is if you're trading, is what the value in the books of the one that you're going to trade in. That would be one, right? Know how much you owe on yours. That's another important one to know. So in other words, if the books say your vehicle's worth 10 and you owe 11, you got $1,000 upside down. You got to add 1,000 to whatever you're looking at to come up with the right payment. Or it might be the other way around. You might find out that you owe 8,000 on something that's worth 12. There's your down payment. You don't have to take any money out of the bank to put down in a vehicle. That equity between what you owe and what your trade's worth would be like down payment. How much deposit is required by the bank based on the questions I've asked? So when you talk to the bank of what's my budget, what can I get for this amount of money? Do I have to put money down for that? Is there some certain schedule that you're looking for? Minus equity could require some makeup money if it's severe. So another part of it is if you owe 12 on a vehicle that's worth 9, you're 3,000 upside down. The bank might say, well, we want you to pay part of that in minus equity. We don't want to finance that in there that much. They might finance in 1,000 for you or so, but 3,000, that's a bit much to ask. They'd want some down payment. You need to know that. You need to know what options, what vehicle and what options, and maybe the number of seats you need. I mean, it does no good to look at a vehicle and find out it's only 4 passengers if there's 3 kids, you and your husband, that's 5. And you may want one for one more, so that you may want something with 6 seat belts. And then later on, when you go to pick it out and you've picked the vehicle out, that's when you get the MSRP and the NADA book on the used or whatever. But you don't worry about that before you leave the house. You just want to know that you're looking at the right vehicles that qualify for your family needs. You want to know how you're stuck on whether new, used, either. You need to know whether you're going to consider used vehicles. That depends on some of the other questions that we've gotten answered. They'll start pointing in a direction for you or giving you the idea that maybe you should consider both. Another question will come up will be gas or electric. If you're considering electric, read about it both pro and con before you do. My suggestion is to not go electric. Make your own informed choice. If you have a definite budget, going electric means you have to buy less vehicle. because of the electric prices. And with electric, you probably need 2 vehicles in the household because there's times when the electric's not going to work. That's why I'm saying, unless if you've got an unlimited budget and money's not really a problem, well, electric vehicle's fine. You can put up with all the grief and agony and stuff. You get stuck and they're waiting for it to charge. And I know there's guys in the paper the other day talking about doing research so vehicles will charge in 5 minutes. They can research till the cows come home. They're not getting vehicles to charge in 5 minutes. Not with that kind of big battery consumption. No, that's not going to happen. Sure would be good if they did, wouldn't it? Boy, that'd be great. It'd be almost like a gas vehicle. So anyway, if you're going to consider electric, think about it first. If you're on a tight budget, you shouldn't be looking at electric. Should you go with a purchase or a lease, or do you want to check both? Doesn't hurt to check both. What dealer amenities do you need? So you need to know, we're going to buy this vehicle. We need to buy it somewhere where they have hours on the weekends. So we can go in and get service on Saturday because we both work, or at nights. And I want to know they have loaner vehicles or at least in rentals on the place, because if the car breaks down and I have to get home, I have to be able to rent one or lease one or get a loaner or something. You need to know that. Location, is the location good? The dealer going to buy from? What's the best location for you? And then you need to know which deal. Let's say you have a dealer that you prefer. I like this dealership in this location. It works good. They've got the hours and stuff. Okay, let's look at the Better Business Bureau. Past experience, reputation. Is it positive? That's important. You got to see a dealer with a bunch of complaints. I don't know. It doesn't get better after you buy. It's It's a culture. Then you got to sit down and think about, well, what dealer installed accessories do we want? Do we want rust proofing? Do we want paint sealant? Do we want, Scotch guarding the seats? Because we don't have much money to put down and we're a little upside down, we're going to need gap insurance. You need to know these things so you can shop them separately before you even look at or why you're even looking at a vehicle. Another question you need to ask yourself, how long do we want to keep a vehicle? If we're buying one, how long should we plan on the ownership be? Because that'll tell you whether you want to buy an extended warranty or not. And if you're going to buy an extended warranty, that adds to the price, that adds to the monthly payment. You need to know that when you're figuring out this budget as to what vehicle to look at. Another one to think about, if we're going to go start looking for a car now, what time frame advantages are on our side? If we wait 9 days, it'll be the last day of the month. Well, there you are. That might be the day to go in after you've picked out a vehicle. You can go shop and drive them and stuff anytime. That's got nothing to do with drive time frame. But when you go in to negotiate, when you go to sit down to buy, that's when time frame matters. So that's why you want to get all that done before you go in, and then on the last day of the month you would go in there, or whatever other reason there is in the time frame. Call your insurance company and ask them if buying a new vehicle is going to change your rate. They might tell you that if you lease one, it's going to change your rate because you don't have 100, 300, and then lease companies require that. So if you lease, it's going to raise your rate a little bit in some cases. Some cases it won't. Depends. You need to know that, though, going in, right? If you have a garage in your house, what length of vehicle fits in it? We need to know that, too, right? I know people, I've had it happen, that have bought vehicles and then came back and said, it won't fit in my garage. They own it. It's used now. You can't back up that being used. But those are the answers you need before you start looking. They'll help you determine a starting point. New, used, car, truck, van. They'll get your thinking right budget-wise. So when you get out there looking, you're not getting a bunch of figures on the wrong vehicle. You get yourself a payment calculator in advance. You can even figure out, well, we're thinking our budget's $500 or $400 a month, and, we want to stay at 60 months. Well, you can figure out back into what that comes to in terms of how much you can spend. Maybe you got some equity in your vehicle, you could spend a little more. Anyway, that's the things you need to think about before you get out there, and that's why I want to talk about this for Jenny. That's what you need to do, is sit down and talk about that first, then go out and look at vehicles. So you're looking at the right one. That's important. So you end up looking at the right vehicles. If you like the show, please take a couple of minutes and do a review on iTunes or Google Play or iHeartRadio or Spotify or wherever you pick up the show. If you have already done a review, thank you very much. Don't forget to tell your friends and relatives about the podcast. They'll save dollars and you'll be a hero. Most of all, they'll save money, though. That's nice for anybody. Right now, we all got to be thinking about money. Inflation's really making a mess of things. We got to get a dollar where we can get one, and this is one of the ways. Those of you who'd like some written material to carry with you when you're out shopping, get a copy of The Informed Buyer from Amazon Kindle, Barnes & Noble, Nook, either one. It'll give you the basics. You can put it on your smartphone or your tablet or whatever, download it. It's $3. No inflation. It's been $3 for the last 6 or 7 years. Inflation has not affected it, so it's an inflationless item. Spend the $3 and get it. This week, I was thinking about all the credit issues that have come up from people during these tough times. First, you had the COVID thing, and a lot of people were out of work and stuff. And you had those things, and now you got the issues with the inflation, higher interest rates, people's coming in where they don't get their rent for free. They have to start paying their rent. And there's people who have lost jobs. There's companies going out of business. I mean, I know that repossessions with the banks are up, with all banks. Well, people don't let their cars get repossessed unless they have to. And there's ways around that. You really don't have to let your car get repossessed. You don't have to get into those jams. If you do some thinking, if you're preemptive about it. It doesn't have to be like that. I mean, we're going to go through tough times. Okay, what can we do about it? This week I was thinking about all the things that during those tough times that we could do to make it better. I mean, let's face it. If you've got inflation and stuff and you're going to be short on money and you've got, your budget has changed now, family health comes first, or at least it should. You got to eat. That's more important to have your family healthy than being able to drive them around. Unless you're independently wealthy, you should be considering your credit score. These are the times when credit scores get banged because we don't preemptive about it. We just let things get built up or behind. I was talking to a guy in the mortgage business that lives down the street from me, and he said he's got people that are 5 or 6 months behind on their mortgage. Well, I'll tell you something. You're not catching up 5 or 6 months. No, not unless you win the lotto or you sell the house or you sell something. This is a real issue. Certainly many of us are going to miss payments because we're out of work or we're laid off or we're sick or our business closed, or maybe it's a need to spread the peanut butter a little thinner. Maybe that's what we've had to do, and your budget no longer works as it is, but this can all hurt you in the long run without having some planning. No question about it. You got to think about this in advance. The selfish Congress and Senate only think about you paying today's bills, but these ridiculous situations affect you long after. Those of you who lost your government-mandated unemployment, but maybe your income hasn't changed, maybe it's just a change in what you have to put out. Maybe you're having to put out more because your grocery bill's more and the different things are costing you more now because of inflation, gas, and all that stuff. And so your budget's the same, but except for those things, and that means it's trouble coming up with the money to pay those regular bills. One thing I'll mention is if you start getting cornered in your budget, one of the first things to do, if you're really getting yourself into a jam, is call your debtors. Let them know what's going on. Hey, I've got a payment with the bank. I'm running behind sometimes. I just want you guys to know that we're struggling because of this and that, and we want to stay in touch. It can have a direct effect on your credit. Slow payment record can hurt your credit just like not paying. They report that to the credit bureau. There's no guarantees as to how much, but it definitely can hurt your credit. There's no doubt about that. And if you can talk to them, a lot of times they won't do that because you're keeping them up to date. You can give them some way to stay on top of things. That's all they're worried about is surprises. You notice that banks like, I think it was Wells Fargo, only made $17 billion instead of projected $17.5 billion they were supposed to make. I mean, they made $3 billion instead of $3.5 billion. That would be the net. Well, the truth of the matter is, from what I understand, is that they're holding back money for the people that are going to go bad during the recession. There's businesses that are going to take the pipe. Right? It's going to be tough from time to time. So what we're talking about doing is how do we protect ourselves during the tough times? How do I keep our credit score up so that when the tough times are over, I can still buy something because my credit's not killed? I mean, take the basic credit scores, 500. She had a credit score of 500. You got to buy here, pay here. You're not going to finance anything with a bank. 501 to 580s are financeable, but the industry calls that secondary financing, high interest rate, high, vehicles that aren't the top of the line, not the best circumstances. Then you have credit scores from 581 to 650, higher bank rates, but often, you can get a loan, but it's just, you're going to need some stipulations and proof of who you are, where you live, and all that stuff. And you're going to have a higher rate. And then 650 to 700 is not bad, but not the best. Can be improved, but without unusual circumstances like zero down. They probably aren't going to do zero down with that credit score. 701 to 750 is good credit. 750 and up is great credit, but they're good enough. Once you're in the sevens, you're probably approvable in most situations as long as you have the ability to pay. They're not going to lend money to somebody, or they shouldn't. It doesn't have the ability to pay. People ask me quite often about how it's determined and what can they do about it. With the current business climate and economy, we all need to protect our credit scores, if possible. I mean, this is an issue that we got to think about. The factors that determine credit score are primarily your payment history, on time or not just not making them, are they on time? The amount of debt you have, how much you owe, your amount of experience you've had, how many loans you've had in the past that are paid, and your available unused credit. People say to me, well, I got some credit cards so I can help my credit. That didn't help your credit. People think it does not. Having empty credit cards scares the bank when they're loaning money because you could go out and use them anytime you want. And then once you've used it, who's going to get paid first? Where are they going to fall on the list? That's what they're thinking. Having a lot of unused credit is not a good thing. There are other factors that affect the final decision, like time on the job is important, time at your address is important, especially if you're in the anywhere below 720 down. Time on the job and address can make a difference. They have a bigger effect on poor credit, obviously, but they affect credit, allowances to some effect on almost any loan. Credit can affect your car insurance premiums as well. We know about that, right? We talked about during the insurance episodes how that has a big effect on what you're paying for your insurance. The things to do to raise your credit score and protect it, in my opinion, and I'll tell you this is an opinion list because it's only the list from experience. There is no manual for this. These are the things you need to do. Raising it, and in many cases in the future, just keep it from dropping during these tough times. If you have a number of credit cards, get rid of most of the empty cards. Actually, close them out and completely cancel with the company to get it off your credit report. Just because you tear up the card doesn't take it off your credit report. You still have the availability. You can order a new card. Too much available credit scares the lender, especially if it's a climate of business, right? They are afraid will start to use it and wonder where they could fall into payment. They might think, well, everybody else is going to get paid before us because they've already wore out the product they bought on our loan. So that's how they think. They think like that. They plan for the future. They look at their opportunities coming up, and that's one of the things that they don't like. Another one's pay your bills on time. It's not like being late to the doctor's appointment. No, don't be late. Don't let your credit card balances get too high. Responsible borrowing affects credit. But if you can't, let's say you have a temporary problem with no pay or less pay from your job. Call the lender and tell them. Don't hide. Ask for help, and what can they do? Maybe a smaller payment amount or a bigger payment later or a couple of payments refactored into the loan. What ideas does the loan source have? What can you do to help me during this tough time? I don't want to have a problem. I'm going to keep my credit in line with you folks. They'll come up with something, I guarantee you. Pay off any collections, any bill at all, or arrange for paying it in the future. Bargain for time. But if you got a doctor that turns you into the credit bureau collection, pay it. Make a plan to pay it with them. Yes, don't let that go. That's not going to help you. Successfully paying many types of credit like a car, a major credit card, a mortgage, those are good things. Like I said before, a few types of credit you pay on time is what's important. So it's not like you got to have a bunch of cards. If you got a credit card you paid on time, you've had a car that you paid off on time, you have a mortgage that you paid on time, that really says that you're a good risk. If you're late at all now, why would you think that they'd allow you to afford more debt? If you can't pay the payments on your house on time now, a banker would have to be nuts to lend you more money. You've already proven that you can't pay your payments now, at least on time. If you're struggling a little, try to stay up to date with as many as possible. If you have 4 payments, let's say, try to keep 3 of them up to date. If you're going to get behind with just one. And how you do that would be talk to all the lenders. Which one is the most flexible? Who's willing to help you the most? Then pay the other one. Rent might give you time for a couple of months and make it up over the next 6 months. Maybe the landlord will skip the next 2 months' rent and you'll pay a lot more for the next 6 months after that. If so, they've not been paying rent under the federal mandate, I don't have any suggestions there. If you haven't been paying rent and now that it's come up, they're going to probably tell you to get out, I would have to guess. But if I can't tell you how to catch up. Don't apply for credit cards or lines unless you absolutely need them, especially if you're going through a rough time. Don't even apply. That's not a good thing. Remember that moving your address or your job has a credit effect. Less time at either means more risk in the bank's mind. During tough times, stay put both home and job if you can. The flexibility of a lending institution can be determined by these to a great deal. They're really big. There's things that you can have in your credit, little tiny glitches, that they'll ignore if those two look good. Time on the job and where you've lived a long time. Those make a big difference. The opposite of these really affects credit, like collection from a doctor bill, but they're not as bad as numerous late payments. You can have a collection from a doctor bill, and that would be less effect on your credit score than a bunch of late payments that were paid, but they were paid late. Too many credit cards would hurt you more, too. If your mortgage payments are late, it's a sign you won't pay on time for less important items. If you're not paying your mortgage, why would you pay for something less important? This is another example of communication between important sources, like, for instance, your bank and you, or your bank and your mortgage company. You got to communicate if you're running into a jam, if you're having an income problem. These people are there will help you if they know about it. They won't help you at all if they don't. Also affecting it are things like unpaid child support. In some states, this one shuts your credit completely off. You're done. Your child support's not paid. Nobody's lending you anything. And I don't know. Unless you have a really good excuse, it's rightfully so, I think. You got to pay for your kids. Repossession charge-off by lenders. They give up on it totally. They don't go away. Just because they stop trying to collect from you doesn't mean they go away. So avoiding that's imperative, because if you have a repossession, just because they don't call you anymore doesn't mean it's going to get off your credit. Nope. Repossessions take a long time to get off your credit. I think they can get off in some credit bureaus, but I think it takes 12 years. Double anything in your credit hurts 3 times as much. So if you have 2 repos, you're done. Even a few years later, kills you in credit chance. You have no chance then. If you've committed the same act again, nobody's going to lend you anything that I'm aware of. The point is, you can fix or defend your credit score, or you can ruin it. It's up to you. No matter how tough things are, you can still protect your credit score by communicating with the banks, having a plan to how you pay. So communicate. Too much is way better than not enough. Pay as many on time as possible by getting up a postponement on one. Maybe you can get one that'll give you a few months off or whatever. And that allows you to keep the other ones paid. Close out whatever credit card you can, completely closed out. Work out a new budget based on where you are with any changes. Now, not later. Don't wait till later to do it. Do it now. You got to plan on this is coming. The crunch in the economy is coming. Look at all the experts, the real experts. They're talking about, I know you got stock market saying, I know Jamie Dimon said it's the end of the world. Then 3 days later, he said, oh, no, it's not. It's going to be bad. We're not going to have one. They go along, the market goes along with whatever fits, because that's what they're doing, is they're selling that financing. in the finances involved. Truth of the matter is that I think it's pretty clear that we're going to have a recession of some type. It's already started, and it could get much worse. A lot of guys are saying it's going to be worse than the 2008, which was pretty bad. 1980s was bad, early 80s. But the important thing is you got to prepare for it. And if you prepare, and let's say you get your budget worked out and you get things prepared and you start working on this new budget, and we don't have a recession, so you were prepared. Better to be safe than sorry. Hope for the best, but plan for the worst. Take care of your credit, for sure. Always. Well, that's Deal Talk this week. If you have a question, a request, or even a comment, please call or email me. Callers, it's 407-801-4071. That's 407-801-4071. Or email dealtalkpodcast@gmail.com. That's dealtalkpodcast@gmail.com. Please don't forget to do a review and do yourself a favor by getting a copy of The Informed Buyer from Amazon or Nook. Spend the $3. Like I mentioned before, tell your friends and relatives. They'll save big, and thank you for it every single time. However I can help you, contact me, and you'll hear from me. And remember, every payment you get should be CPI, complete payment information. The amount, the months, the rate, the required down payment to get to those terms, every time they quote you a payment. And if you're getting your own financing, and you're just getting a price, every price you get should be all in. Every single cost required to buy the vehicle. Don't let them tell you plus fees, plus that. No. I want the total price in the vehicle, including tax, tag, dealer fee, options, every single cost. They call it OTD. Give me the out the door.